Hi, everybody. It's Peter Schiff. This is Wednesday, February 10th, 2010. Well, first of all, today we got the release of December's trade deficit. It actually unexpectedly widened to over $40 billion, I think 40.2 for December. Annualize that out, we're running a trade deficit of over $500 billion per year. And again, this shows that the government policy is interfering with the necessary rebalancing of the American economy. Instead of Americans consuming less and saving more so that the trade deficit can shrink, government and Fed policy are encouraging more excess consumption, and so the trade deficit is expanding and not contracting, and we are digging ourselves into yet a deeper hole. Speaking about nations in a deep hole, we're still getting a lot of talk about Greece and a potential bailout. I think a lot of the uncertainty regarding the Greek situation is still putting a bid under the dollar. The dollar index is still trading right at the 80 level, which is around the highs that it's managed to reach for many months. Now, of course, a lot of people are talking about a Greek bailout as if it's a good thing. Of course, bailing out the Greek government is the worst thing the European Union can do. Unfortunately, it looks like some type of bailout is coming. And it's unfortunate for the Europeans because this sends a very terrible message. It creates a moral hazard, not only for Greece, but for the rest of Europe as well. Here's what this says. If the Greek government is able to get a bailout, the message that it sends is it's okay to be reckless. It's okay to be irresponsible. You can promise something for nothing to get elected, because when you have a problem, you're going to get bailed out. Now, not only is this going to encourage Greece to act more irresponsibly in the future, but it sends a message to other countries in Europe, like Portugal or like Spain, that, hey, you don't need to get your act together. You can keep on borrowing. You can keep on running your deficits, because if you run into problems, well, we're just going to bail you out just like Greece. So you create this moral hazard where everybody has an incentive to be irresponsible because there is no cost for being irresponsible. Also, the same moral hazard is sent out to creditors. If Greece is bailed out, that means that the people who loaned money to Greece, the people who bought their bonds, don't have to lose any money. And so the message this sends to creditors is, don't worry about how much debt a country has. Loan them money anyway, because if they fail, you're going to get bailed out. And what this does is now this creates a situation where a country like Portugal, for example, now they have no incentive to be responsible. They can go out and run up more debts. And the lenders, well, they'll keep lending them the money because they don't care, because they know, well, they bailed out Greece. Well, I guess they'll bail out Portugal. That is the problem. We have to let entities fail. Investors have to know that they lose money if they make loans to overly indebted entities. I think we're going to have the same problem in the United States on a state level as individual municipalities or states begin to fail and the federal government bails them out. And that is going to lead to even more reckless spending on the part of more states, and it's going to lead lenders to indiscriminately extend credit because they're going to feel that they're going to get bailed out even if the borrowers can't repay. And of course, this punishes the creditworthy states or the creditworthy countries who end up having to pay more even though they're acting responsibly, which encourages them to act irresponsibly when they might have been responsible all along. Now, talking about total irresponsibility, let me talk a little bit about the jobs bill that is being passed now. And I think the centerpiece of this new jobs bill is a payroll tax holiday. And the way this works is that if any company hires somebody who has been unemployed for at least 2 months, that they don't have to pay a 6.2% FICA tax for the first year until the end of 2010. Now, at the margin, this is going to create very few jobs. I mean, it might not create any jobs, who knows? But what this is going to do is going to allow politicians to take credit for jobs that are created anyway and saying it's part of the program. Because what the bill says is that if a company fires somebody for cause, or if an employee quits, that they can replace that worker, and that replacement worker qualifies for the payroll tax holiday. Now, if I'm an employer and somebody quits, chances are I'm going to hire somebody to replace them. After all, if I didn't need them, I would have laid them off. Similarly, if I fire somebody for cause, which means I'm firing them because they're doing a bad job, because they screwed up, not because the business is slow. If I'm firing somebody for cause, well, I'm going to replace them anyway. So all this bill is really doing is giving employers a tax cut when they replace workers who they fired or who were quit. Now, maybe this is a benefit to that employer, but it's not creating any jobs. Those jobs are going to be created anyway. All that it's going to do is allow the politicians to claim credit for these replacement jobs, but also it's going to run up the deficit. And my fear is the larger deficit that's going to result, because the government is not going to be collecting payroll taxes that it otherwise would have collected. What's going to happen is the extra deficit spending, which is going to have to be financed by taking private capital out of the economy, is likely to destroy more jobs than this bill creates, if it even creates any. Because the way I look at it, if a business is not hiring somebody at all because they simply don't need a worker or they can't afford it, if the government comes and says, well, we'll let you pay them 6% less, so that instead of paying them $30,000, you can hire them for $28,500, am I really going to go out and hire somebody? I mean, if I don't need them, is that really going to make a difference for 1 year? I doubt it. And if it really did make a difference, I probably would have already offered somebody the job at a little bit less money, and maybe a worker would have taken it. I think that the bigger problem of this bill is going to be for people who work in minimum wage type jobs, very low skilled, where you can easily substitute workers. Because I think what's going to happen there is employers are going to have an incentive to be very strict in the way they monitor their workers. If somebody is late by a few minutes or calls in sick one day, I think employers are going to be far more likely to fire people because they know they can rehire somebody and cut down their payroll costs. And I think this is a real risk. And of course, that person who gets fired right away, he's going to have a tough time getting a job, certainly right away, because after all, who's going to hire him? He's going to have to be unemployed for at least 2 months before anybody would consider hiring him, because after all, they can hire somebody else who has been unemployed for more than 6 months and get a payroll tax break. The bottom line is all this bill does is let our politicians claim credit for passing a jobs bill that creates jobs. And at the end of the year, or during the year, they'll look at how many employers are taking advantage of this credit, and they will claim that as all the jobs that they created, even though 99% of those jobs are going to be simply replacing workers who quit or were fired, who would have been replaced anyway, even without this bill. And I think the reason that I need to be in the U.S. Senate in particular is to put a stop to this stuff, to point out to the other senators how nonsensical a bill like this is, and to the public that no jobs are being created. This allows the politicians to claim credit, to act like they're doing something. Meanwhile, they go about destroying jobs, and there is no meaningful legislation at reducing regulation, cutting government spending, so that we can have meaningful tax reductions, so that we really can have more jobs. These gimmicks are going to do absolutely nothing. One more thing I want to talk about in the way of gimmicks. I heard that the Federal Reserve is talking now about a way to raise interest rates without raising interest rates. They're talking about the fact that instead of raising the Fed funds rate or the discount rate, that they want to start paying banks higher rates of interest on their reserves, on their excess reserves, as a means of raising interest rates. I don't think that's a means of raising interest rates at all. I think that's a means of avoiding raising interest rates. I think that's creating the appearance of higher interest rates. What it really will amount to is another secret bank bailout. Because what will probably happen is the banks will be able to borrow money cheaply from the Federal Reserve and then loan it right back to them at a higher rate and make risk-free profits for doing absolutely nothing. Now, I read that Ben Bernanke said that, well, this isn't going to happen because the discount rate of the Fed fund rate will be higher than that rate. Well, that doesn't make any sense. If he's saying that he's not going to raise the Fed funds rate, if he's going to start his tightening process by increasing the rate of interest that he's paying on excess reserves, then that's not the case. And all this is a bank bailout. It's a way of delaying the inevitable. And I think the reason that they're looking for these gimmicks is because they know if they do start increasing interest rates the traditional way, that it's going to bankrupt these financial institutions because they can't afford it. That's how bad a shape they're in. Also on Fed obfuscation, I read an article again today where Ben Bernanke was talking about the fact that the government hasn't lost any money on the TARP, or the Fed hasn't lost any money, that they have a profit on the $1 trillion+ worth of assets that they purchased. Well, the only reason they have a profit is because they haven't sold any of them yet. Because they're making the market, they've got a bid in the market, it's artificial. Of course, the losses are going to hit when they try to sell, or as the borrowers start defaulting on these obligations. It's just like Lehman Brothers didn't have any losses until the whole thing blew up. The same thing is going to happen to the Fed. Anyway, thanks everybody for today. I'll be back again soon.